The candle range theory is the ultimate tool for predicting the next candle. You will learn all the candle mechanics that lie behind the candle range formations that will allow you to be ahead of the market. Our first model would be the continued stop and reverse model. Now, you would need to have watched the previous prediction of the next candle video, which shows you guys the first basic formations, and this video we're going over the more advanced formations. So I will link that video in the cards above, as well as at the end of the video. Now, if you're following a bullish trend or bearish trend, whichever trend you're following, you want to see the last 2 to 3 candles being formed, they have to show some sort of lack of volatility. And this can be clearly defined by candles having a good dividends of wicks and body, meaning not too much body, and you'd like to see a lot more wicks being shown to you. As in this example, we see a lot of wicks being formed out, and this to me would shout out that this would be a low volatile market. In this scenario, it'd be much easier for price to make a simple sweep below a low point when compared to a more volatile impulse market where it's very hard to see price make a dry back down. Okay, in that scenario, you want to use the candle impulse theory, which, as I said, we spoke about in the previous videos. Okay, now, obviously, with any other CRT model, the timing would be very important. So if you're looking at this between the times of the 159 or using your 5 AM time CRT, like I've shown you guys previously, this would also be used in great context. Okay, now for all of this, once you see price makes a sweep of that candle, you can always predict that now the next candle will probably be a bullish candle to seek out the next form of liquidity. Okay, and you want to see this candle be a larger candle because the sweep of liquidity allows the new move to be fueled up. Okay, now this is our after impulse recovery CR model. Okay, we've just previously spoken about how consolidated markets or low moving markets, okay, slow moving markets allow us to see greater formation of CRT. However, in the aftermath of a major news event or in the aftermath of some sort of high volatile event, you see that you'll be left with this impulsive candle. Now, it's much common to believe that prices continue with this impulsive nature. However, that's not how the manipulative market that we trade in works. Majority of the time, that impulse would usually stack a ton of sellers if to a bearish scenario, such as this one. It would stack a ton of sellers at this one point, and from that point, we then see a complete reversal of this to now take out any other stop losses that would have been accumulated, or as some may call it, just to fill out the gap that was left behind in the market. Okay. However, a very key important factor to understand is that the recovery is very slow moving. It's not as impulsive. Okay, so price went through a huge exhaust and now starts to slowly recover back up that pricing and then continue higher. Okay. Now, as we stated before, this is also going to be mainly focusing on how the candle itself forms out. If it were to be a bullish candle, you'd want to see that there is a major wick on the top side, okay, because this shows some sort of rejection. Okay, this rejection is good because it also shows us the sweep that may happen later on. As in this example, this bearish candle here, we had a long wick on the low side, and that will show us that there'll be a much larger rejection, and that's where you see we have another sweep here. Okay, now this is the schematic of it. Slow moving market, but then bang, we have a new impulsive candle. Okay, wicks below shows rejection, price sweeps that point and then starts to come in with new volatility to now fill the gap that was left behind or clear out any liquidity created in that impulsive move, which should then be supported by 4 more traders. Okay, and this would be the schematic that I've shown you previously on the lower time, right? Your CR high and your CR low, price makes that rejection. Okay, rejection is very important because now once you make a sweep below that point, this can act as a form of market structure, right? Because this will form out your lower high, okay, and low point. We then have a market structure shift or 10 state delivery. We can then see price come back into that order block and then extend towards our draw on liquidity. Okay, this is a new model that I'm looking to decipher into, which it is the indecisive candle range model. Okay, now this one mainly focuses on the, as the name states, indecisive candles. Okay, candles with, as we know, very minimal body but huge amounts of work. Okay, and usually what happens with these type of candles, it usually shows us this consolidated market. Okay, this consolidated market with sideways price action, and within this we can see that there's high chance of price liquidating the highs and lows of the previous candle. Okay, as you see right here, this kind of sweeps out this previous high and low, and we can expect the next one to do the exact same thing, which is to sweep out that high and low. Within that, already finding your lower time frame trend and your lower time frame entry model to then target the next round liquidity. Okay. Now, another way to look at this is also sort of an expanding trend, right? As you see, we're creating higher highs as well as creating lower lows in that exact same moment. Okay. Now, here is another example of this in the live market. As you can see right here, expanding nature of our indecisive candles, minimum body, but major wicks right on either side. And you can see that it keeps on expanding on each and every single candle. Now we use this in our favor. We have these strong lows and highs both being swept out, right? Both being swept out. Here we have the new strong low, price sweeps below that, and now we can expect the drawn liquidity to be the next high point, right, of that previous candle. And that's how you use this on your lower time frame. Here is our next model, the consolidative CR model. Okay, as the name also states, a consolidative formation of our last few previous candles forming out in this sideways formation, as you can see right there. Okay, not much of bullishness or bearishness shown in high potential. Okay, but also does not have to be, indecisive candles. It can also be full body candles, but just make sure they're all sort of trapped in that low, range between this sideways movement. Okay, this also allows for easier transfer from liquidity point to liquidity point, where we see much higher chance of us seeing manipulations. And this is good for us because that's what the CR model is founded upon: manipulations and liquidations. Okay, so we can always expect that the probable next candle in this sort of trend would then be another candle that sweeps both the high and low of the previous candle. And at that point, you'd find your entry point and exit point. Okay, now here's an example of this consolidated mark, right? The last 3 to 4 candles are very slow moving. They also create this low range here, okay, of the sideways movement. Simply you mark the high and the low of the most recent candle, and you also see that price then sweeps the high and the low. Within that point, you can see also on the lower time frame, we identify an AMD model: accumulation, manipulation, distribution. Okay, and the price makes a redistribution where we take out that high and low point. Okay, now this is going to be a re-dive into the previous model I just showed you. However, I've even found more information to also give you guys more clarity on it. Okay, the delayed CR model. Now this model mainly focuses on the time CRT candles that form moments before major news events. Okay, the 1, 5, and 9 a.m. Eastern Standard Time. Or you're gonna have your PM session news. You'll also be using the 1 p.m. candle in correlation. Now this candle specifically happens once we are either just before a news event, so in something like NFP, FOMC, CPI. Okay, you usually see that if it is an 8 a.m. news event, the 9 a.m. candle will be used in high regard because you usually see a huge sweep during that 9:15 purge, where you then see a reversal, right? This is why I would say we're gonna see 2, okay, CRTs happen. One just before the news event and one of the session CRT. Okay, so this could be your 5 a.m. candle, and then we see another purge on the 50-minute time frame of a 9:15 movement. Okay, and then the probable next candle will always be the reverse of where the sweep happened. If the sweep happened on the lows, you'd want to then see the probable next candle start to extend towards the high points. Okay, and that's why our probable next candle in this situation will be a bullish candle that sweeps both areas of liquidity. Okay, this is a very important model. If you apply this during your high major impact news events, you'll start to see the true nature of these candles. Okay, now our SMT CR model, this one has been axed in high regard. This one I'll focus on the correlations of major pairs. Okay, so for futures traders, that would be your NASDAQ, NQ, and S&P. For your commodity traders, that would be your gold and your silver. And then for the normal fiat currency or forex traders, that would be your USD and GPSD. Okay, there could be others that you guys go to research, but these are my recommended pairs that also allow you guys to also use the SMT model. Okay, as the name suggests, it is our common SMT. The reason why it's so probable is because it adds even more confidence to an already very good setup. Okay, the CR model already contains the power 3, the kill zones, the turtle soups. Okay, now adding the SMT divergence is icing on the cake, which allows us to even redefine what we see as a good setup. Okay, as you can see right here on NQ, we see our stop and reverse model, right? As I said, this is from our previous videos, and this entire CRT playlist should be linked at the end of this video soon. Okay, right here we have our go, stop, okay, and then reverse. Okay, at this point we see that a CRT occurred on NASDAQ, but if you see that no CRT occurred, okay, no CRT sweep occurred on ES, you can take that as a divergence in price. Okay, because majority of the time these pairs move very alike to one another. Once you see a difference in that, you can take that as a movement to see that there has now been a divergence in these two price assets, and now we can look to use this to our advantage. Okay, we just expect NAS have a shortfall and ES to have a shortfall, okay? In most cases, you can also just imagine that ES was supposed to take out this high, however, it failed to do so, okay? But that would allow us to see our higher high and lower high, which gives our divergence in price, okay? Now, if you guys would like higher information on all these models, you can also book a free call with me and my team with the first link in the description, or you can also just sign up for our site to join the exclusive community of our CRT traders. These are the timeframes you'd like to focus on, okay? Your CRT formations and the purge of CRT are the two main points you want to focus on when you're looking at your timeframes, okay? For your CRT formations, okay, you want to be focusing on your daily, 4 hour and 1 hour time frame, okay? And now for the purge of those CRTs, okay, so the sweeps, those will be mainly focusing on the 15-minute time frame, okay? And in terms of entries, it'll be your 5 minutes or your 1 to 3 minute time frame, okay? Very simple, basic time frame correlations. Now, here's the test. What is the next candle? Using what I've taught you, using what we've learned, I'll give you guys a bit of time to also look over what we're seeing in these different scenarios, okay? For the first one, we can see that we're following a sort of consolidated market, right? The last few candles were all sort of following that sideways movement. Now, as you can see also, it's very easy to see that this candle gets swept out, okay? This candle also got swept out, that candle high also got swept out. So it's very easy to see that there's a lot of sweeps happening, okay? So with that in mind, we can also expect that this recent candle here should also have the next candle sweep its high and low. And as you can see, the next candle sweeps both the high and the low. And as always, with your lower time frame entry confirmations, you'd want to get at where the sweep happens and then trade towards the opposing liquidity. Now for our next scenario, we're seeing indecisive candles, which are also following an expanding formation. We see low lows be creating, and as well, we start to see price also having a higher rise towards making higher highs. Now with that understanding, we can expect that the next candle is probably going to be another indecisive candle, which is defined as a candle which follows a large wick on either side and minimal body, okay? And as you can see, the candle is an indecisive candle that suits both the high and the low. In this case, once again, you are just looking to trade in between this range. Whatever happens out of this range does not concern you. Even if price moves lower, you will be out of the trade as soon as it hits this one point, okay? And now we can see here is our first impulsive character happening, where we have a huge bearish candle, okay? From this point, many people would be selling upon the opening of this candle, and you would then be looking for price to make an optimal reversal or recovery to fill out the gap that's being formed, okay? So we can then expect the next candle to be some form of bullish candles, okay? To then reach this area of liquidity or even the previous candle equilibrium. And there we go. Once again, we see that the candle sweeps this low point and is attracted to the next round of liquidity. Now, if you guys got all three, well done to you. There's even more examples of this in the Discord link in the description, as well as the full PDF of all the CRTs explanation that I've already given you guys, okay? Now let's also hop into some live examples of this that me and my team have taken this current week, so you guys also have recent data and not just thinking that this is all hindsight information. Now, this is a sneak peek into the premium access of the Nova Legacy. As I said, if you guys want access to the server, it should be in the link in the description. You can come here and book a free call with me and my team, or you could come and access the extra content where you'll be able to find all our CRT PDFs that I've already posted out for you guys there, okay? Now, coming back into our exclusive community, here was my daily outlook also on gold. Gold then created this CRT. I marked the low and the high. The high was already swept out. However, we still were looking for that low to make a sweep and reversal back up. And we had a projection of 1.3.4% to the high rise with gold. And as you can see, the sweep then happened, and then also called out that we're going to look to extend higher from this point. And as you can see, gold then massively pushed all the way and then stopped at the 1.3.4%, okay? As well as NASDAQ too, we then also created that CRT low point, right? We swept this CRT low, and here's our CR high, okay? Once we swept that point, I was then also saying that we're going to look to high rise to the next drawn liquidity. And as you can see, NASDAQ then also followed that schematic, okay? And this is the most recent point of NASDAQ where we had that impulsive nature, and we then looked for the reversal back up, as well as gold, we saw this reversal counter trend CR model, which I'll be showing you guys right now in this video, okay? As I say, guys, you guys want access to this, as well as see all my single trades every single day using these CRT models, make sure to book your call to understand a bit more and get access to the server, or just go through our site link. We'll then also be partnered up with your accountability coach, which will track your data every single day to make sure you're on the right path watching your trade data and improving your backtesting data, as well as giving you refinements on your strategy to build you and keep you consistent on your trading routine. And that way you can actually achieve trading consistency through accountability. Now let us look at our first outlook on gold. As you can see right here, we're following this consolidated market, which is outlined by our last few candles following this sideways movement. Okay, so with that in mind, I'll then understand that highly likely that our next candle should be a candle that sweeps both the high and low. Okay, we're not worried if it is a bullish or bearish candle. We're just worried and looking forward to a sweep of the high, and then we can then look to trade towards the low point. Okay, or vice versa. Okay, now from this point we just go down to the lower time frame. So your 5-minute time frame. Now as you can see on the 5-minute time frame, we have our range identified, the high, the CR high, and the CR low. And as you can see, we finally then get a movement towards that high point. Okay, as well as we can also identify a lower time CRT occurring where it's predefined by this candle low, okay, and this recent candle high sweep. Okay, from this point you can either wait for the next candle to also show a similar push to the downside and just sell regardless, okay, or you can wait for an FVG to then form out. Okay, like this would have been a possible area to enter at since it is a chain of state delivery. However, we'll just wait for the FVG, which occurred right over here. As I said, guys, this was the trade that we're looking at with our exclusive community, and then we trade towards the low point. Okay, and as you can see, price continues to take its time. However, it is not swept out our low point, so the trade is still valid until it reaches this area. Okay, and then you can see price then taps us in, and then finally reaches our first drawn liquidity. Okay, and that would have been your trade for the day. And as well, this also was also our daily outlook on gold. Okay, using the models I've shown you. Now let's also look at our outlook on NQ that was had for this week. As you can see, this was the nature of Nasdaq after major news event. Also, just looking back at this is the 1 hour time frame. However, on the 4 hour time frame, we saw a sweep of this CR high. The price then swept above and then started to extend low. Okay, as I said, we usually see a CRT just before a news event, and now we're going to use our after recovery model to also trade the movement after the news. Okay, now marking out our 1 hour CRT low, okay, and CRT high. From this point, we simply then go down to a lower time frame like the 15-minute time frame to look for a purge. Okay, now we just need our purge. Okay, and there we go. We do get a purge of this low point. From here, now you go on the lower time frame like the 5-minute to look for any entries. And now this is what I was looking at specifically with my members, my exclusive members on our trading live stream every single day. We're looking at this fair value gap, looking for it to inverse, and that will then trigger our entries for us to long up and then look to target our CRT high point. Okay, as you can see, price then starts to move forward from that point. Okay, and as I said previously, usually these recoveries take their time, but eventually price will also reach our drawn liquidity. Okay, so this was what we're looking at for this specific day. Now, if you guys want more clarifications on all the CRT models that I do teach, make sure to watch our previous video or the entire CRT playlist that I've given to you guys. Or conversely, you could make sure to book a free one-on-one personal call with me, and I'll be able to show you guys everything I do, and you can get more insight from me. Or you can just go directly to our website where you can then get your sessions into the exclusive community where you'll see my daily outlooks and all my trades that I take every single day, as well as get access to our daily live streams, trading and looking to predict the next candle.